Michael Burry has exposed the US government for the worst scandal in history. When Burry foresaw the 2008 housing bubble, many assumed that he had gone nuts. However, the housing crisis is nothing compared to the monster that Burry is seeing right now. He's either the smartest person in the room or the most delusionary fund manager. Hey friends, welcome back to Finance Insights. Today we're talking about the insider trading, government manipulation, and a multi-year inflationary crisis that the US government is trying hard to hide from the world. So without any further ado, let's begin. The Federal Reserve is indeed deceiving us. They were due to withdraw tens of thousands of dollars from the economy beginning June 1st, 2022. But they didn't. That may appear to be a bold remark, yet it is supported by irrefutable facts. The Federal Reserve is required by law to declare all of its assets, which can be viewed on the New York Fed website. The Fed states that beginning June 1st, it will sell $47.5 billion in securities per month. This sale consists of $3 billion in Treasury bonds and $17.5 billion in mortgage-backed securities. Michael Burry checked the Fed's website and discovered that they were not selling the quantity they claimed. Drugs are hard to kick, Burry tweeted. Starting June 1st, the Fed was planned to sell 30 billion treasuries and 17.5 billion mortgage-backed securities per month. Tightening quantitatively, mortgage-backed security holdings increased by over $3 billion in June. Treasury holdings were valued at less than $10 billion. Instead of selling $3 billion in treasury bonds or treasuries in June, the Fed only sold less than $10 billion. In addition, rather than selling $17.5 billion in mortgage-backed securities, or MBS for short, the Fed purchased $3 billion in MBS. The Federal Reserve is committing brazen fraud. They're not cutting back at the promised rate. Furthermore, the US administration is suppressing the truth that the economy is collapsing. The White House revised the definition of recession as the US economy appeared to be entering one. A recession is commonly defined as 2 quarters of negative GDP growth in a row. The US GDP has fallen for 2 quarters in a row, indicating that we are currently in a recession. That is not what the White House wants you to believe. On July 21st, the White House published a blog in which it defines a recession as a drop in the labor market, consumer and corporate spending, industrial production, and incomes. Burry understands that this is absurd because the economy, as measured by GDP, is definitely falling. He tweeted, "The White House would like you to redefine a recession as one in which consumers are not borrowing on credit cards to pay for inflation, and neither is the labor force adequate for the size of the economy. GDP out Thursday, not that there is anything wrong with that." Burry is essentially stating that the White House is deliberately misleading you with the fall figures. According to the White House, inflation-adjusted income or real personal income is an indicator of economic stability. Burry is aware that this is incorrect because credit card debt is climbing as a result of rising prices. The White House also mentioned the unemployment rate, which is fairly low at the moment. Michael Burry argues that this is misleading once again because fewer people are working. People are quitting the labor force through retirement or just not looking for work. The unemployment rate only includes people actively looking for work. The labor force participation rate, which is much lower than pre-pandemic levels, demonstrates this. The White House is either unaware of this or deliberately spreading misinformation. The government's action boosted sentiment in the short run, since the Fed stated that it will raise interest rates and begin quantitative tightening. Market sentiment has plummeted. People have recently begun to regain their confidence. Burry argues that such idiocy suggests that the crisis is far from over. People's increased optimism shows that we are simply in a dead cat bounce. Burry tweeted, "The silliness is back. After 1929, after 1968, after 2000, after 2008, the strain of silliness that transformed the bulls into bubbles completely and utterly disappeared. But that familiar COVID-era silliness is not dead yet. Like 2001 before Enron, before WorldCom." While the economy remains in decline, speculative investors are engaged in what Burry refers to as silly behavior. Magic Empire Global, a Hong Kong financial services company, just went public on the stock exchange and has increased in value by more than 24 times. This is typical of the same speculative behavior that occurred in 1999 and 2021. Gamblers gamble more the more they lost. #silliness. Burry tweeted. Burry is talking about the Monte Carlo fallacy, often known as gambler's fallacy. The Monte Carlo fallacy is the idea that post-losses suggest a greater likelihood of the future wins. This is being seen with equities such as Magic Empire Global. To fit their narrative, the mainstream media regularly attempts to complicate Burry's premise. Michael Burry chastised Business Insider for dividing his thesis into 3 pieces. One paragraph in the article made it appear as if Burry's was bullish when he wasn't. Many investors have been dumping stocks, cryptocurrencies, and other assets in expectations of additional rate hikes and a tighter money supply, according to the text. Michael Burry divided his theory in 2 pieces in order to challenge the mainstream media. When you notice inventory bills, think of 2 things, according to him: inflation and just-in-case supply chain management. According to Burry, rising inventories imply falling prices. Inflation will not simply rise or fall in a straight line. It will rise and fall in a cyclical pattern with an upward long-term tendency. Earnings reports are one short-term signal that the mainstream media focuses on. Earnings reports summarize a company's performance over the previous quarter. Companies have done well thus far, according to recent earnings reports. However, most corporations estimate that their upcoming quarters will be a catastrophic disaster. These earnings reports, and by Jove, the whole session have a last rough feel. Burry explained, by Jove is a reference to the Roman deity Jupiter, which translates as "Oh my God." This essentially suggests that the firms have been taken aback by what is to come. The last hurrah is the final victory before total failure. Burry claims that while recent earnings reports appear to be excellent, the following ones will be disastrous. Walmart is the embodiment of this. Walmart reportedly reduced its earnings forecast for the following quarters and the final fiscal year 2023. Burry laughed in response to Walmart's earnings. Later, he explained how someone was going on about Christmas in July. Hope you enjoyed it. Burry believes that the impending inflationary crisis will be worse than any other in the US history. The year 2020 is the mother of all bubbles. The last 2 inflationary periods in the United States, the 1940s, 50s, and the 1970s, each had 3 distinct inflationary peaks. The 20s, post-flu World War I nihilism, the 40s, post-war spending, baby boom, the 70s, bad energy, and Fed policy, the 2020s, all of the above. Burry cautioned, the 2020 have practically all of the inflationary traits that our prior crisis had. We are currently in a post-COVID state. The Federal Reserve has printed trillions of dollars and will most likely be continued to do so. Energy prices are still skyrocketing. The US administration is certainly preparing the economy for a terrifying crisis, but that is the only beginning. Behind the scenes, government officials have been aggressively insider trading. Politicians have been leveraging government resources to help corporations in which they own stock. Nancy Pelosi, the Speaker of the House, is the personification of this. Pelosi has a history of buying stocks before the government raises interest rates. They exist in some shape or form. Pelosi recently purchased semiconductor stock before the CHIPS bill was passed as an illustration of this. So Speaker Pelosi earned a bundle on semiconductor stocks acquired recently because she knew this was coming. Burry tweeted, "It should be prohibited." Another example is Joe Biden selling oil to a company in which Hunter Biden had a stake. So Biden sold 950,000 strategic petroleum reserve oil barrels to Sinopec, a Chinese oil firm. Burry tweeted, Hunter's private equity firms have made a $1.7 billion investment in Sinopec Marketing, a wholly owned subsidiary of Sinopec. Burry feels that there should be more scrutiny of the government's insider trading, and he's correct. The activities of the White House and the Fed are not in line with the long-term success of the United States. What we are telling you in this video will never be told by the mainstream media. Please hit the like button if you appreciate our efforts. Please don't forget to hit the subscribe button and click on the bell icon for more updates on the world economy, finance, and much more. Thanks for watching this video and see you again in the next one.